All right, thanks for joining me. And in this video, I want to introduce to you the latest course that I've worked on. I've worked on it for a few months. It is called Mastering Technical Analysis. Now, if you're struggling to learn the technicals, if you're struggling to read the charts properly, maybe you have a lot of other things in place, but the charts are confusing. That's what this course is about. You can check it out on our website. Go to tradersfly.com. You can scroll down and there it is, Mastering Technical Analysis. Now, we go into some depth of information when it comes to the technicals, and I'll give you a little outline. Right now, the course is over 6 hours long. There's 24 videos, and I'll give you kind of the PowerPoint grid line to or outline that I've worked on for this course. And for example, we start out with things with where do technicals fall into place and how do they apply? So we're looking at money management concepts first, position management, then chart patterns, and then candlestick patterns. So we're looking at it from a hierarchy of focus. So that's kind of one of the main things we'll look at. We get into some of the basics behind different types of charts and the things that I like. We look at candlestick basics. For example, what does a bullish candle look like? What does a bearish candle look like? For some of you, this might seem very basic, but if you're just brand new to charts and you don't understand charts, this is going to be a good arsenal of tools and knowledge and insight. Looking at the candlesticks, so these types of charts and what's kind of the purpose behind it. So get into quite a handful of knowledge in there with those candlesticks. We look at also the four phases of a stock. So for example, accumulation, markup, distribution, and why these phases are important. So you can see here on screen, it looks at different time frames and looking at here kind of the also the different stages of those phases. So that's some of the concepts. We'll look at volume. You know, what is volume, how it works, how it behaves, and kind of how it applies to those charts. We'll look at examples of volume as well. So for example, real volume, what does it mean? And we'll talk about these charts, specifically how to spot these volume patterns and bullish volume that's coming in or bearish volume that's coming in, and how to identify them. We'll also look at cause and effect. We'll look at support and resistance lines. So if you're struggling with support, resistance, how to identify them, we'll go ahead and look at those as well. And what does it really mean? So identifying those support and resistance levels. We'll even take a look at how support turns into resistance and vice versa. Drawing those lines, you can see how certain charts will come back to retest support and resistance. And we'll look at trend lines, how they apply with different angles and different levels and how to draw them. We'll look at ABCD patterns, how they play a role in charts and price movements and behaviors going from A to B, B to C, and C to D, and what's kind of the natural tendency of stocks when they go through these ABCD patterns. What kind of volume should you look for? We'll look at confluence and retracements. How stocks pull back, how do they retrace? We'll look at even expected moves like standard deviations based on the options expected move. And we'll even get into Fibonacci sequences. So these different sequences that prices move through as prices pull back, as prices power higher. How much can we expect for those prices to move? And what's kind of those levels? We'll look at gaps. For example, if you are confused about gaps, how to interpret them, where to put the support and resistance, and what does it mean when a stock gaps down or gaps up, and gap fillings. We'll talk about that as well. And just a ton of knowledge. So if you're struggling to figure out where to get in, how to set a stop, when should you not set a stop, you know, swing points, volume, Fibonacci levels, support, resistance, different time frames, overhead supply, taking profits. There's a ton of concepts there that we'll take a look at. And all of that can be found right there. If you go to tradersfly.com, you go to that website right there, scroll down and you'll see it on our website. When you click that, it'll take you to our courses website where you can go ahead and purchase that course. So there's a ton of knowledge and information there in this material, where if you're struggling with the charts, we're going to break it down for you. So in the case, go ahead, scroll down, look at the description. If you're interested in this course, there's more in this video that you can watch and learn more about the course and material. And I highly encourage you to check this course out. If it's something you're struggling with, if you're trying to learn technical analysis, if you don't like reading charts, if you're unsure of where prices might go, what you're trying to do is give yourself a little bit of an edge of momentum, understand pricing, understand behavior. And if you can do that, it might help you create a couple of extra successful trades. And those few successful trades allows you to really put on the appropriate positions for movement, direction, and being a little bit more oriented to where the stock may go. Now, we don't always know where the stock price might go. In fact, there's a lot of trading strategies like iron condors for non-directional trading. But if you're also doing things more like a long-term investor where there is some directional bias or where you want to have a little more delta, understanding the technicals and pricing behaviors is going to help you out. The other thing with the technicals is, remember, prices move more based on technicals. They don't move as much on fundamentals. Fundamentals is the core, it's the baseline, but in the shorter time frames, prices are really moving based on the technicals. So if you understand the technicals, then that's really how prices move. The fundamentals do apply, but they usually apply for a 1 year, 2 year, 5 year time horizon. They're not applying for maybe 2 or 3 weeks or 1 or 2 months because that's where maybe the price action is much more favorable or the charts are more important. So highly encourage you, scroll down, check out this course, and that way you can continue to learn, study, and get more knowledge and insight about learning about chart patterns, behaviors, pricings, and much more. So thanks for joining me, and I hope to see you in the course.